The broadcast is now starting. All attendees are in listen-only mode.
Good morning. Welcome to today's webinar on California's incentives and tax credits for businesses. This webinar is being hosted by the Office of Small Business Advocate, a unit under GO-Biz. My name is Megan Hodap, and I'm a Small Business Program Analyst with the Office of Small Business Advocate. Today's webinar features Bianca Sievers, who is Senior Business Development Specialist with GO-Biz's Business Investment Services Unit. She assists businesses that are looking to either relocate or grow in California. Bianca previously worked in our California Competes tax credit program and is a subject matter expert on incentives and tax credits available for businesses in California. Before I turn the webinar over to Bianca to get started, I would like to introduce to you some of the features of GoToWebinar, the platform we're using today. At the far right of your screen, you should see a vertical toolbar. This toolbar will provide you with access to audio and visual for the presentation. If you experience any technical audio issues, please click on Help at the top of the toolbar and then select Sound Check. This will allow you to check your audio configuration. Participant lines will remain muted during the entire presentation. If you have a question during the webinar, please submit it during the presentation via the Questions chat box. The Questions chat box is located in the middle of the toolbar. GO-Biz staff will respond to questions during the Q&A session at the end of the presentation. At the top left of the toolbar, you'll see two icons. The blue icon with a white box allows you to view the presentation in full screen mode. The blue icon with a picture of a hand allows you to raise your hand to ask questions during the webinar. This feature will not be used since questions will be addressed at the end of the webinar via the questions chat box. I will now turn the webinar over to Bianca to begin her presentation. Welcome, Bianca, and thank you for being here.
Thank you, Megan. All right, good morning, everyone. Let's get right to it. So today I'll be walking you through some key initiatives and tax credits available for small businesses. My name is Bianca Sievers, and I do work with Megan at GO-Biz. I understand that navigating government processes can be confusing and burdensome, and that's why our office is here. Some of our core functions include incentive identification, workforce development, site selection, and local, state, and federal facilitation. As California's single point of contact for economic development and job creation efforts, we look forward to helping your business grow and prosper in the state of California. So let's dive into the first incentive that we're going to cover today, the California Competes tax credit. So if you don't know about this program, it's something that definitely needs to be on your radar. The California Competes tax credit is an income tax credit for businesses planning to grow in the state of California. Something that's really unique for this program is that 25% of the total credits available each year are specifically reserved for small businesses. Something that you should definitely keep in mind is this credit is non-refundable, so it's not a grant. If you apply for this program, essentially you're looking at the next 5 tax years and estimating what your growth is in terms of the amount of employees that you plan to hire and the amount of investments that you plan to make. In exchange for that 5-year growth estimate, you are applying for an income tax credit that would be distributed over those 5 years. So you would essentially, if awarded this credit, you are tied to specific contractual milestones of jobs and investments. What's really great about this program as well is there's no geographic or sector-specific restrictions. So you can be located anywhere within the state of California and be doing any type of business as long as it is a legal business and apply for this program. Over the course of a given fiscal year, there are typically 3 application periods, and I have given you 3 timelines to keep in mind. The specific dates for the upcoming fiscal year have not been announced yet, but we know that they're going to likely be in the summer of 2017, the winter of 2018, and the spring of 2018. We have estimated that at least $200 million in tax credits will be available for this upcoming fiscal year. And as I mentioned on the previous page, 25% of that is going to be allocated to small business specifically. Now, something that's really important for this program is it has a unique definition of small business. To qualify as a small business, you have to have your worldwide gross receipts in your previous taxable year be greater than 0 but less than $2 million to qualify as a small business. Now this is really important because if you fall within that definition, when you are applying for this program, you are only competing against other applicants that also fall within that definition. So you're not going to be competing with the mega Fortune 500 companies that do apply for this, or companies of bigger scale. You're just going to be competing against people in that parameter. So here are some of the evaluation factors of this program. I'm not going to cover all of these, but it's important to keep in mind that the analyst that's reviewing your application is considering all of these factors holistically. No one evaluation factor is weighted over the other, but a few that I'm going to call out here is obviously this is a job creation program, so they are going to be looking at the number of jobs that you're creating. However, there is a caveat to that. It's not just about the number, it's also about the types of jobs. So they're taking into account what industry that you're in. What are the types of jobs being created, meaning what's the classifications of those jobs, what are the skill sets required for those jobs, and what is the salary and benefits proposed for those jobs that you're going to be creating over that next 5-year timeline. So while there is quantitative elements of the evaluation factors, there's also qualitative. So it's very important in your application to really tell your story. What is your growth plan? Why do you need this tax credit in order to make this growth happen for your business? So let's briefly walk through what the application process looks like. So you start out in phase 1. Phase 1 is you've just submitted your online application. And just to reiterate, I don't think I mentioned earlier, it is free to apply. So you get about 2.5 weeks to submit an application, and then you'd enter into phase 1, in which it's a purely quantitative analysis of a cost-benefit ratio. So essentially this cost-benefit ratio is used to compare against every other business that is in the applicant pool. We rank you based on your cost-benefit ratio, which is determined based on the amount of aggregate investments you plan to make over the next 5 years, the amount of salary based on the net increase of employees that you plan to hire over the 5 years, relative to the amount of credit that you are requesting. So that cost-benefit ratio is compared to everybody else in the applicant pool, and those with the most advantageous cost-benefit ratio are then advanced into phase 2. So it's purely that quantitative numbers we're looking at in phase 1. As you advance into phase 2, where the application or the analyst is then going to consider all of those evaluation factors you saw on the previous screen. So are you located in an area of the state with high unemployment and high poverty? What would be the strategic importance of awarding your business a tax credit for the community? Are there specific benefits that you support your or provide your employees that are better than maybe the industry standard, or do you provide extra training for your employees that would be make your application more competitive relative to the others that have applied? Once a business is evaluated by an analyst at GO-Biz and recommended for a credit, you would enter into the third phase of the process, which is the agreements phase. At the agreements phase, applicants are then recommended for an award by GO-Biz, and GO-Biz then negotiates with the applicant themselves the terms of the agreement. What's really great here is GO-Biz prides itself on the transparency of this program, so you can go to their website right now and look at all of the applicants that have ever been awarded this tax credit, and you can actually look at their agreements and see what they have been committed to. And so essentially what you'll find in these agreements is those hiring and investment commitments that I mentioned is crucial to this program. And then you'll also see the amount of tax credit they've been allocated per tax year over the course of 5 years. So once that agreement is finalized between GO-Biz and the applicant, It is then advanced to the California Competes Tax Credit Committee, which is comprised of 5 members. A variety are appointed by the legislature, and some are representatives across the administration. Once you receive approval from that committee, your tax credit agreement becomes legitimate, and you will then move forward and be allowed to claim that credit as you achieve those milestones. So in conclusion to this program, I wanted to provide all of you with some important contact information. So here is the email and phone for this program, the website to apply. As I mentioned earlier, again, this is free to apply. The entire application is online at www.calcompetes.ca.gov. The team that works on this, the GO-Biz team that works on this program, is extremely responsive, and I know from personal experience from being on that team formerly, they have a policy of responding to your inquiries within 24 hours. So they are very helpful, and I've also attached a link here for additional resources. If you have any questions, they have a frequently asked questions document, an application guide, and additional resources for you to take advantage of. This webinar, just to remind you, will be posted on our website, and we can certainly provide you a copy of this PowerPoint if you want to get this information written so you don't have to write it down at this time. All right, so let's jump into the next one I want to cover, the partial sales and use tax exemption. This program is administered by the Board of Equalization, and this is essentially a program that provides a sales and use tax exemption of 3.9375% for basic manufacturing equipment. And something that the Board of Equalization recommends is that because tax law can be complicated, they recommend contacting them and getting it in writing for that qualified equipment. So I'll provide you some contact information for them, but if you're ever on the fence of if the equipment you are trying to claim this exemption for is not eligible, make sure you get it in writing from the Board of Equalization. And so something else to keep in mind is the partial exemption also applies only to the state sales and use tax rate portion. And so typically when you purchase equipment, there's additional tax associated at the local level. This only applies to the state level. Something else to keep in mind is for the purposes of this exemption, the manufacturing process begins from the point in which you receive raw materials and introduce them into the manufacturing, processing, refining, fabricating, or recycling activity of the qualified person, and ending at the point at which the activity has altered the product to its completed form, including packaging if required. So this is really important because this is a sales and use tax exemption for manufacturing equipment. And as you can see on the screen, there are 3 components that you need to keep in mind in order to claim this tax exemption. So you need to be engaged in certain types of business. So what that means is you have to be a qualified person. And a qualified person means a person who is primarily engaged in those lines of business described in the North American Industry Classification System codes. And I've listed the specific codes that your business must fall within in order to be a qualified person. Now, if you haven't heard of this system, it's also commonly referred to in the abbreviated form as NAICS. Now, this system is purely self-identified by the business. So if you have any questions about that, you can certainly call the Board of Equalization and they can instruct you on what your line of business or how your line of business falls into a specific code. So these codes are used to as identifiers of if you are a qualified person. The second thing that you need to keep in mind is, are you purchasing qualified property? Now, qualified property includes, but is not limited to, which is why you should get it in writing from the BOE, machinery and equipment or devices used to require or operate, control, regulate, or maintain the machinery, tangible personal property used in pollution control, and specific purpose buildings and foundations used as an integral part of the manufacturing, processing, refining, fabricating, or recycling process. Now, the last thing that you need to make sure that you're doing is you are using this qualified property for the allowed uses. So what BOE defines that as is it's the tangible personal property must be primarily used in one of the following ways. Any stage of the manufacturing, processing, refining, fabricating, or recycling process, research and development, or lastly, to maintain, repair, measure, or test any qualified tangible personal property described by the above, or for use by a contractor purchasing that property for use in the performance of a construction contract for a qualified person. So those are the three things that you need to keep in mind in order to claim this exemption. Once you've confirmed that you have successfully are eligible across these three parameters, you can then fill out a one-page form at the Board of Equalization. So I've provided on their contact information page a link to the form. You can find it right at BOE, and this is the specific form. You would just print it out and fill this one-page form out and provide it to the vendor at the time of purchase. It's an immediate benefit. It's very easy to use, and as I mentioned, it would be a reduction in about approximately 4% of that sales and use tax exemption on that manufacturing equipment. So I provided you their email and phone here, a link to that form, and additional resources that, similar to the Cal Competes, also has FAQs and additional instruction for you. All right, jumping right into the next incentive that we're going to go over, the new employment credit. So this credit is administered by the Franchise Tax Board, and it's available each taxable year to a qualified taxpayer that hires a qualified full-time employee and pays qualified wages in a designated census tract and receives a tentative credit reservation for that qualified employee. Okay, so what you've just heard is a ton of qualified terms. We're going to review that on the next slide. But what's really important to think about is this credit is, at face value, it does have a lot of parameters for eligibility. So I'm going to, at a very high level, cover those so that you can quickly determine if this program is right for you. And something else that I do want to point out is this credit does have the exact same definition for a small business as the California Competes tax credit program. So small businesses with gross receipts between 0 and 2 million are exempt from industry exclusions. So there are some industry exclusions associated with this program, and those include, for example, retail, but small businesses are going to be exempt from those exclusions. In addition, something to keep in mind is that in order to be allowed this credit, the qualified taxpayer must have a net increase in full-time employees determined on an annual full-time equivalent basis. So what that means is when you start claiming this credit, over the course of a year, you need to actually have a net increase in those full-time employees. And when we mention full-time employees, those are employees that are working typically at least 35 hours a week on average. And those are also going to be W-2 employees, so that would not include contract employees. Okay, so as I just mentioned all of those qualified terms, I decided to break this down for you in these three quick and easy parameters. So one, are you hiring qualified full-time employees? So for the purpose of this program, to qualify as a full-time employee, you have to meet these 5 parameters or qualify for at least one of them. So are you hiring any employees that have been unemployed for 6 months immediately preceding hire? Are you going to be hiring any veterans that were separated from the U.S. Armed Forces in the preceding 12 months? Will you hire anyone that has earned the Earned Income Tax Credit in the previous taxable year? Are you hiring anyone that was an ex-offender, convicted of a felony, or anyone that takes advantage of any CalWorks, current CalWorks or general assistance. So you don't have to hire an individual that has all of these qualifications. What we're asking is, are you hiring someone with one of these? And if you are, then you are hiring a qualified full-time employee. 2, are you paying them qualified wages? The portion of wages paid or incurred must exceed 150% of the employer's state minimum wage, but does not exceed 350% of the employer's state minimum wage. So what does that mean? That means currently the state's current minimum wage is $10.50. So 150% above that is $15.75. So if you're paying any of your employees above $15.75, then you might want to consider this program. And then lastly, number 3, is your business located within a designated geographic area? So that is also termed DGAs for short, and those are comprised of designated census tracts that have the highest unemployment and highest poverty in the state. They are also inclusive of former enterprise zones and former LAMBRAs. Now, this can easily be determined by going to the Franchise Tax Board's website and typing in the address of your business, and it will immediately give you an output of if you're located in a DGA or not. So if you satisfy all 3 of these qualifications for eligibility, then you should consider this program. If not, then this might not be the one for you, and I would definitely recommend reviewing the California Competes Tax Credit Program, because as I mentioned earlier, that one does not have any restrictions on your industry type, and it does not have any restrictions on your geographic area. Okay, so lastly, if you've gotten through all of those 3 and you do think you're eligible for this program, how to claim this credit. So each year, you can claim this credit, but prior to claiming that credit, you need to submit a tentative credit reservation within 30 days of completing the Employment Development Department's new hire reporting requirements. This is needed in order to compute the allowable credit amount. So essentially, there's a calculation associated with the amount of wages that you pay above the minimum wage to a qualified employee in a qualified DGA to determine the amount of credit that you would get. So once you do that, then you would certify annually to the amount of new employees that you have that meet those qualifications to the Franchise Tax Board, and then you would be able to claim this credit. So as I provided with the other programs, here is the contact information for the new employment credit. I've provided you their email, their website, and additional resources. Now, this program has an extensive amount of frequently asked questions. As you've kind of been led into seeing in this presentation, it has a lot of specific nuances and qualifications. So they have great resources available for you to check out. All right, and the last incentive that I'm going to cover today is the Employment Training Panel. Now, the Employment Training Panel is a state agency that uses a pay-for-performance contract to reimburse the cost for employer-customized job skills training. What's really great about this program is it's highly utilized. So since the start of this program, 80,000 California businesses have utilized this program. I think that that's pretty impressive, and I was looking at some of the numbers earlier, and I believe over $1 billion have been reallocated to businesses to support the training of their employees. And so I think that that's something that should resonate with you as you consider this program. ETP, I want to clarify, does not provide the training, but provides the funding in order for you to do the training. They do not mandate training topics. you work with the employment training panel staff to develop that curriculum. And also, they do not select or approve trainers. They work with you to help make sure that you are working with a qualified trainer. I also want to point out that the employment training panel, the way that they gain their funding is through the employment training tax, and this is collected as part of the unemployment insurance tax paid by employers for each employee in California. The funding is then aggregated into the employment training fund, which is then administered by this program. All right, so getting started. First step is to register at the Employment Training Panel's website. They do have an orientation online or by interactive session in which they can go into a more detailed overview of how this program works. Then the next step would be to complete the preliminary application, and at that point a specific staff member from the Employment Training Panel will engage with you and move forward on developing that curriculum with you, making sure that you have qualified employees and a qualified trainer. So the next thing that you'll need to consider is eligibility determination. So the preliminary application is reviewed by an analyst at the Employment Training Panel, and they will be assigned to your project. So as I mentioned, they're going to help you develop that training plan, review your training needs, and help you request the appropriate funding and prepare that application. Something that you also need to keep in mind is to be eligible for funding reimbursement, employers must do the following. They must be subject to the unemployment insurance contribution and employment training tax, have one or more full-time employees, and use the California employer account number to report wages. So that is really crucial in order to receive this reimbursement for training. The last step in this process is the panel review. So once your request for funding is completed and you've submitted your application, we've worked with the staff, you will be invited to submit your request to the panel. Once your project is approved by the panel, you can then begin your training. So lastly, some additional parameters to keep in mind. To earn this funding, trainees must complete at least 8 hours of training or up to 200 hours. Now this detail is worked out in the previous stage where you're working with an analyst specifically, and that is all built into a contract. You must also have your trainees work full-time during a post-training employment retention period, and this is usually about 90 days. And then lastly, the trainees must earn an ETP minimum wage during retention. So as long as you're meeting those parameters, you can take advantage of this program and earn that reimbursement. Something that I also wanted to point out is training that is not funded includes any legally mandated training such as sexual harassment or labor law, company onboarding, professional license training, general safety, or continuing education units. And also ETP currently is promoting the following initiatives. So any training that you are proposing with veterans, at-risk youth, ex-offenders, or individuals with disabilities, that is something that the Employment Training Panel is actively trying to support and will offer you additional flexibilities in your agreement if those are populations that you are actively training. So here is the contact information for the Employment Training Panel. I've provided you their email and phone. Here is the specific website to apply for the program and to find out more information. And then I've also provided you a link to their additional resources. They've specifically carved out information that is relevant to small businesses. So please check out that link for more detailed information. And lastly, as I begin to conclude this webinar, I want to point out that these are just a few of the resources available to you. So please check out the California Business Portal if you haven't already. The website is www.businessportal.ca.gov. You can find a lot more resources specifically around financing, workforce development, registering your business, and a whole slew of additional incentives and tax credits that I did not cover in this webinar. So please, please check that out. Thank you so much for your time. Again, my name is Bianca Sievers, and it was a pleasure talking to all of you today. I've included my email address if you have any questions or would like additional assistance. We're really here to help you grow your business. So have a great day.
Okay, thank you, Bianca. We're going to go ahead and go into the question and answer portion. I have a few questions that have been submitted during the presentation. If you have any additional questions, please go ahead and type them in the questions pane, and I will read them, and then Bianca will go through and answer each of them. So the first one, it says, what about items that are purchased out of state for the sales and use tax exemption?
Sure, that's a great question. So for the sales and use tax exemption, if you do purchase items outside of the state, you can still utilize this exemption. However, you will only be eligible for the use component of that sales and use tax exemption. So it's a smaller percentage than the 4%, but it's still the same form. You would just identify that it is an item outside of the state.
Perfect. Next question. For new employment tax, does the business or employee need to be in a DGA?
Yes. So the new employment credit does require that, I believe it's at least 50% of the time of that specific employee is spent in that DGA in order to qualify. So it has to be over 50% of their time to qualify. So you can, as I mentioned, you can go to the Franchise Tax Board's website and confirm that your specific location is located in a DGA.
Perfect. What is the amount of the new employment tax credit?
So the new employment tax credit is a calculation. And so while I didn't get into the details of this in the webinar, basically what you need to know is any amount of wages paid above the 150% above the minimum wage. So right now the minimum wage is $10.50. 150% of that is $15.75. If you're paying your employee any amount above $15.75, there's a calculation in which you take the difference between that 150% and the amount you are paying above and multiplying it by 35%. And that is going to determine your qualified wages. Now there are some specific nuances associated with that calculation, but that is kind of the quick and easy calculation off the cuff. Now, the Franchise Tax Board does provide specific examples of how to calculate that credit on their website, on the FAQ. So I would recommend reviewing some of that to determine the specific dollar amount associated with that credit.
Okay. What about items that were purchased in previous years?
Okay, so I'm assuming that this is in relation to the partial sales and use tax exemption. So there is some allowance to claim that exemption for retroactively purchased equipment. I would check the Board of Equalization's website for the exact cutoff, but I believe it is up to a year previously. For the other programs that we discussed today, the California Competes Tax Credit Program is all prospective. So you could not include in your application any investments that were made prior to submitting that application. So keep in mind that most of the incentive programs offered at the state of California are focused on prospective growth. They're trying to incentivize expansion and growth of your business. So that's something that I wanted to make sure was distinguished.
So I will wait a couple more minutes to see if any other questions come through. Just a note that this presentation will be going on the GO-Biz website, and you'll be notified by email once that is posted. So yeah. So I don't see any more questions coming through. So at this point, this concludes our webinar. So thank you to Bianca as well as each of the participants for joining us today. The slides and audio of this presentation will be posted to the GO-Biz website. We will notify all registrants by email once they're posted. Please join us for our final webinar next Wednesday, May 31st at 10 a.m. on international trade. For more information and to register, please visit calismallbizmonth.com. Thank you.